Eric Muadith, Muadith.com, for the weekend of November 14th and November 15th, 2015. Take a look at how markets closed on Friday. Pretty much we all know the markets were down about 1.5% on the NASDAQ and 1% on the SPX and on the Dow. We also see a down day here for another down day for crude oil, and the VIX was up about 10%. For the week, S&P 500 was down 3.6%. And for the week, we see that the Dow was down 3.7%. And for the week, we see that the NASDAQ was down the most, down about 4.2%. So let's take a look at the charts. Let's begin by taking a look at the NASDAQ Weekly, and we can see now that we have a confirmed resistance on the weekly RSI. This is something we were watching for as we came into the new week. And we saw that this is now confirmed as resistance because this line connects the RSI highs going back to 2014, and the market did come back and make contact in this past week, and now we are seeing this pullback. And one of the reasons why the market is having a relatively big down week here, down about 4%, is because the RSI is coming closer to 50. Whenever the markets move below 50, you get a big drop, just like we had a big drop here in August as the market moved the weekly RSI below 50. So that makes a lot of sense. We also saw resistance coming on the back test line like that. So after this break here in August, the market came back and back tested that blue line and failed. So that was another reason why we were expecting resistance, which is what we got this week. And there's another layer of resistance if you draw it from somewhere here. This gives us, this line here gave us the break signal, and that break signal did give us a high. So take a look at this high somewhere here in June for that short-term high, and since then this has been resistance. We got uniform activity resistance above the red line, back below it for the all-time high on the NASDAQ, and now we are seeing resistance right there. Keep in mind that this resistance on the NASDAQ came at about 61.8, which is just confirmation of market running out of momentum, and that's why we see this slide in the market. If we take a look at the daily for the NASDAQ, one of the reasons why we are having a relatively big down Friday, and actually the last 2 days, because the RSI on the daily is moving below 50. Whenever you move below 50 on the time frame, whatever time frame you are trading, you get a big move. So this, we are seeing this drop over the last 2 days as the NASDAQ slashed below the 50 RSI level on the daily. If we take a look at the long-term monthly view for the NASDAQ, we start seeing signs of a little bit of a problem here in the market, and I'll share that with you, because if you go back to some of the major sell signals on the monthly chart for the NASDAQ, you can see there was one here in 2000, which happens to be somewhere around here before the major drop right there. So that resistance happened to be at about 61.8 on the monthly. So just keep that in mind. So which happens to be here. There was another break somewhere around here, which also happened to be at about 61.8, which was the break late or early 2000 and late 2007, early 2008, and we know what happened in 2008, early 2009. And now we are seeing resistance here as the NASDAQ is unable to move above 61.8. Now the question is, are we going to go into a major bear market correction over the next couple of months? And I think that's a likely scenario. So that's one way to take a look at it, which is if the NASDAQ can't hold above 61.8 on the monthly, we might be entering periods like we did here in 2000 before this drop, and also here in late 2007 before this drop, and this could now open the floodgates for lower prices in the coming months. Take a look now at the Dow Weekly, and we can see that the Dow came back to the line we've been watching. This very simple line connects the RSI highs going back to early 2014, late 2013. So that high and this high here late last year, and now perfect contact, which might be the reason why the market is stalling this week. And we are having a relatively huge drop in terms of a percentage movement for the Dow this week, because it is moving its weekly RSI below 50. As you move below 50, you tend to get a big reaction either way. Moving above 50 tends to be good for an upswing, and when you move below 50, you get a big downswing. So the technical reason, in my opinion, why the market is down substantially this week is because the weekly RSI on the Dow also clipped below 50. And if we take a look at another reason why the market is showing resistance, is if you go back to the previous break level, which happens to be sometime late May or mid-May, so here, which happens to be where the Dow recorded a high on the weekly time frame right there. We can draw a line from there, which I call the uniformity line or the symmetry line, because every time we hit that line now with uniform activity, the market drops. We hit that level again there in July, and the market did make a high and pull back substantially. And now we've come back and we've moved above that red line and back below it with uniform activity, and now we are getting this drop. So net seems like this is the beginning of some more downside action in the market. Let's take a look at the Dow Transports, and one thing we can see here is this market has seemingly changed its behavior. On the way up, it was using the 50 RSI level for bounce. It would hold the 50 level and move higher. Now we are looking at the exact opposite. The 50 has become resistance during recent highs, even resistance here in the month of October during those highs. So it looks like we are entering a market net that is pointing to lower prices in the coming weeks, coming months. If you take a look at my annotated NASDAQ or Dow Transports daily chart, you can see that here we had come back to test that level on the trend line, and that became a problem, and now we are trading lower. So that resistance is confirmed. We also came back to test the top side of this resistance line on the RSI tops, and we are now breaking below the wedge. So we were thinking that either we get a breakout or a breakdown. It is clear here that the market has chosen to break down, which might suggest that there's a possibility of even lower prices as being shown by the Dow Transports. If you take a look at the Dow Transports, the biggest risk is in the coming weeks and in the coming months if we break the line connecting the lows of late 08, early 09 and the lows here. So if this line breaks in the coming weeks and months, any break of that line would be disastrous for the market. One can expect that to lead to a major correction. So that's the risk, that we might break a very important trend line connecting the lows of 08 and the lows of current market. So anything below that is not good. Also, if we break to fresh monthly closing lows, so now we're looking at a 3-year monthly, any break of that trend line in price would not be good. And we've seen other markets do that, like the Canadian market did break below its recent monthly closing low, and the risk there would be that at that point, if it breaks on the price, RSI might move to fresh 3-year lows, which is a major red flag. And also we are looking at the MACDs on the transports already trading close, if not trading at 3-year lows. So the risk here is that this could get worse based on how the markets are looking like right now. I think the biggest and the one chart that is showing me some potential, and it's just potential that the markets could find stability around here, is go back to the lows of August 24th, 25th of this year. On the hourly, you can see that once the market moved above this RSI threshold, we can draw a line from there, and this line has actually been holding the market together. You can see here we tested this green line. Once we moved back above the green line, the market has recovered on each instant. We tested the green line here for the lows there. We tested the green line for the lows there, and now we are testing it again. So short term, if we see a break of that green line, then the market should continue lower. Otherwise, if we can bounce on the green line on the hourly, I think that to me is one of the early signs that the market could be stabilizing around here. So it's either short term support on the RSI here for prices to stabilize and move higher, or we break through that support right here and the prices go lower. Yet if you take a look at, let's say, the S&P 500, we still continue looking at markets here that are really struggling on the weekly time frame. S&P 500 dropping below 50, this past week, which might explain why it was down more than 3.5%, coming back to test the top side where it failed. So that resistance that we've been expecting on that line has finally been fruitful and profitable, I guess. Also, we can see that this is where it has been stalling on that line there, which again happens to be just slightly below 61.8 on the weekly. So lots of reasons here for this market to continue struggling now that the weekly chart is showing some type of early sell signal. Take a look at the daily for the SPX, and we can see for the last 2 days the RSI has jumped below 50. It is this move below 50 that has led to these 2 down days over the last 2 days. Take note of the fact that the RSI did finally try and hold above this red line here, but failed. Ultimately was not able to hold above that line, and I think now, having tried to hold above the red line, we are now looking at a market that could easily continue to struggle. But let's also keep in mind that now we are trading below the 200-day and the 50-day moving average. The 50-day moving average is pointing higher, as you can see, and also we have a flat like looking 200-day moving average. So, you know, I mean, sometimes we have to be careful not to call a market dead just because of 1 or 2 days. So we can see here, if the market can hold, you know, let's say above the 50-day moving average. So if the market can hold above the 50-day moving average, which is pointing higher, maybe there's a chance the market might stabilize. The thing is, the way we closed on Friday, with the market trading below 30.90 on the hourly chart, indicates that there's a lot of downside pressure left short term, just because the market did hold and close below 30.90. The risk is just like here. Take a look at this example. We were below 30.90 here, and those were not the lows. The lows came when the market made an improvement here in the RSI and prices made fresh lows. In other words, it was positive divergence that gave the market a chance of moving higher. Right now, with the market closing below 30.90 on Friday, I think that suggests a market that is still under downside pressure. Keep in mind that the hourly MACDs are still below 0, and whenever the MACDs are below 0, that generally tends to suggest that markets should continue to be trading lower. Let's take a look at Apple, which had a down week, about 7%. That's a big drop. That's a big drop there for the week. But if you go back to last weekend's video, we had talked about this resistance line connecting the RSI highs on the weekly RSI time frame, and that came in contact exactly there. So that resistance this week makes a lot of sense. We are also moving below the 10-week moving average, which is not a good sign. So moving below the 10-week moving average might suggest that the market might continue to struggle. Keep in mind that when the market is trading well, it tends to hug and hold support at the 10-week moving average. You can see here. But now it looks like more and more the 10-week moving average is becoming resistance, and trading below that 10-week moving average is not a good sign. If we take a look at the RSI, we also talked about and if we take a look at the daily, we see that the daily came back to that level of somewhere around here. Now that line right there, I can draw it in red so it show it to that line there, just happens to be at about 61.8. 61.8. If you take a look at the break level here, short-term high there, resistance with uniform activity, short-term high, resistance here for that high, and then it hit that same level, which is this level here, that high, and here we see another instant of resistance, which eventually gave us that high. So lots of sell signals also on the daily, and we are now trading below. After Friday's move, we are trading below the 200-day moving average and also trading below the 50-day moving average. So if Apple is to do well, the first order of business is for it to recapture the 50-day moving average. Otherwise, if it continues trading below that 50-day moving average, we might expect lower prices. So watch the 50. Anything below the 50 might generally indicate a market that is still looking to probe lower prices. I think one thing we can actually look at here is, because Apple closed at about 112.34, if it cracks below this recent monthly closing low of September, If it trades below that, which happens to be at around, let's call it about 110, anything below 110, which is this monthly closing low, would suggest that this stock is due for lower prices. So just keep that in mind. Anything below 110 would suggest fresh monthly move for 2015, which is not good. And also take note of the fact that right now the RSI is being rejected at 61.8 on the monthly RSI. So this monthly chart is showing a rejection here at 61.8, and if we test that idea, let's go back to about the last 20 years or so and a couple of things. So we failed to hold above 61.8, so we failure to hold above 61.8 here in 2000. The stock had a major drop. We failed to hold above 61.8 here, which was in 2008, and we know 2008 was a major down year. And so we are seeing here the threat of moving and showing resistance at 61.8 in 2015, which might suggest some type of a drop in this stock and also for the general market. So in conclusion, let's take a look at 2 monthly charts. We begin by taking a look at the S&P 500. And on the monthly, you can see here that S&P 500 has failed to hold above the previous monthly closing high. In other words, this month of November 2015, we failed to break out, and the level there that the market was trying to move above was 2107.39. So S&P 500 as of right now, this is a failed breakout, and failed breakouts are notorious for taking markets lower. We take a look also at the NASDAQ, and as of the close of this past Friday, we can see that it too failed to hold above the previous monthly closing high. So that's a failed monthly breakout, and the NASDAQ was attempting to break out above 5,000, let's call it about 5128.28. So that's a failed breakout. Failed breakouts do tend sometimes to take markets lower. So with those 2 failed breakouts on the SPX and the NASDAQ, I think here the risk now is that NDQ, the risk here is that the market might actually now be looking to change its behavior and trend lower. I guess that's how things settle out on Friday. We'll see how things go, but for now, failed breakouts, breaking through some weekly closing lows. Things don't look great. Let's wait and see. Let's not jump to conclusions. We have to take this moment by moment. Enjoy the weekend. Eric Muadh, Muadh.com, as always, and I do mean it. I wish you all the best. Good luck, peace and blessings, peace and blessings. Peace and blessings, my friend. Blessings, 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 blessings. Mwah, 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 mwah. See you guys. Love you. I am out.